Okay. Maria and I have refused to accept defeat. It's your girl Aisha, founder and CEO of Bossy Cosmetics, bringing you another Bossy Chat. Hoping to speak with Maria, who is dialing in from Dubai. Let's hope. I think this is like the fourth or fifth attempt at trying to get this Bossy Chat discussion going. So hopefully, if we do eventually make it, can you please not request to get on the live if you're not a guest? I think that's my mom. Don't request a live. So let's hope Maria can come on and actually request and get on. And I'd love to talk to Maria. She's an early stage investor. And I always think that we naturally speak to entrepreneurs, which are people who are doing businesses like I do. And it's always great to hear, from a business perspective, other founders, women who are in business. But I thought it would be really great to have this conversation today with Maria, who's an early stage investor. So let's hope we can get Maria on. Hi, I'm waving hello. Trying to get in touch with Maria, who is an early stage investor. Maria, are you there? Sorry, we are now 15 minutes late. I think this is our fifth attempt at trying to get Maria onto this chat. So I apologize that we're starting really late. Maria, can you please okay, let's see if this works. Fingers crossed. I think it's gonna work. Okay. Okay, first of all, why are you sideways? You are sideways. There we go. Lord.
We
made it.
I did. This is a test of resilience. I'm like, no, I've been looking forward to this. I can't miss this now. No.
I know. I was like, okay, so 10 minutes in, I give up. But I'm like, no, I really want to talk to Maria.
Me too. I've been looking forward to this all day. So I'm like, nope. We are not, but thanks to everyone for being so patient. We figured it out.
I know. Okay, first of all, can you find a way to I can't hear you very well.
Okay, 1 second. Can you hear me much better now?
I can hear you much better now.
Okay, I think I'll stick to this then.
Okay, perfect. All right, now let me start the conversation. So I was saying, what I normally say is hello. It's your girl Aisha, founder and CEO of Bossy Cosmetics. Welcome to Bossy Chats. We have these conversations at least once or twice a month. And traditionally what we've done is I've always interviewed amazing women in business. And we have traditionally focused on entrepreneurs or editors. So the last conversation I had was with the former beauty director at InStyle magazine, but we've traditionally focused on entrepreneurs. I want to introduce you to an operator turned investor, finally, because what I think is really amazing about Maria's background is that she exactly is an operator turned investor. And I think it'll be really great for many people who watch this series who are always looking to raise money. And I think it's always great to hear from an investor, specifically because you focus on early stage, pre-seed and seed, to hear about kind of what's exciting about it, why you got into it, how you got into it, how you made that transition, and most importantly, how folks can raise money. So thank you so much, Maria. If you wouldn't mind making a brief intro of yourself, and then I will get into questions.
Thank you so much, Aisha, and thanks to being patient and weathering through the storm. Maria, and like Aisha said, I'm operator turned investor. I'm so excited to be here. I was really to this because I think Bossy Cosmetics is one of the brands that I really genuinely love. And I'm not just saying this because of your literally wearing lipstick. That's the only lipstick I own right now. Like I'm a huge stan. So it's always really nice to talk to, founders who are building businesses naturally love. So thank you for having me. And then I guess in terms of my background, do we have time? So I'm gonna give because it's a bit of a story, but I'm going to give the short version. So I did start my career in consulting, and I was there for 3 years. I was at Deloitte, so traditional financial services consulting. 3 years into the journey, I got the entrepreneurial itch, kind of like I wanted to do something more entrepreneurial. And that was when I kind of made my jump to Uber, where I was the country manager. Shortly after Uber, I
But
joined
remember,
another
country manager of where? What country was this?
of Nigeria. Yes, so Uber in Nigeria. And that was a bit of a switch actually, because with consulting, you kind of focus more on perfect is better than done. Like any consultant knows, you obsess over the slides, everything must be great. Like, and then you go into like operating and it's kind of the opposite. It's like done is better than perfect. Move. Like there's a bias for action. It's like working with really multidisciplinary teams across countries, across like focus areas. So that's really exciting. And then after that, I joined a startup called, which is a credit-led neobank. And I think what attracted me to that opportunity was really that branch was in its earlier stages. So I felt like it was a good opportunity for me to kind of build a business from start to scale. Uber was a bit of a teenager at the time I joined. So a lot of things had happened that I couldn't quite, really shape. And I felt like branch gave me that opportunity. And so after branch, and this was like a 10-year, career milestone after my undergrad, I kept thinking, I was like, I could keep scaling startups, I could start a business of my own, the entrepreneurial itch came again, or I could explore and see, what was possible. So this is where I have to, fully disclaim, because I used to be one of those people who really bashed the MBAs, right? Like I would say the MBA wasn't worth it. I would say like the brand, it was just buying a brand. I said a lot of stuff, and now I have to eat my words, because I think the MBA was really instrumental in my journey, because it gave me the space to experiment, reflect, and iterate towards something that worked for me. 3 years ago, I didn't know what venture capital was, at least as I do know it now. And during the MBA, I explored with, many different paths, kind of, did a little app, also led the seed fund of my university, which was the University of Oxford Said Business School, and then got my neck deep into venture. So saw a lot of deals, made a lot of investment, learned from the best. Shout out to Elizabeth Yin, who was so supportive in my career. And I then at the end of the MBA figured, you know what, I want to do this. I want to do this for the next,
hold on, Maria, slow down. Because I think you've talked about a lot of transitions, and I want to kind of poke you on some of them. So you started as a consultant, which is a pretty traditional path for a lot of people. And you're finding a lot of young people today don't want to follow the traditional path, right? They want to kind of jump either directly into a startup or maybe start their own company. So you went from a very rigid traditional path to now two startups. One that was like a teenager, and then one that was a proper startup, at least, in the life cycle. How did that feel for you? Let's talk about how it felt going from, a corporate job to startup. How was that?
Yeah, no, this is a very good question. And it's so uncanny, because very few people ask this, because it's a bit of a transition. It was tough, and I have to be honest. And this is one of the experiences in my life that told me that just because you suck at something in the beginning doesn't mean you aren't going to be great at it. Because I remember it being quite a bit of a transition, going from the perfect is better than done, mindset, from the consulting perspective, to a startup where things were moving so quickly. I literally cannot imagine a life where I don't have a bias for action right now. And for the first few, weeks into Uber, I felt like I was drowning, because it was so much information. It was brand new working styles. It was more like execution as opposed to strategy. It was a bit of a switch. So that is such an interesting question, but I'm so glad, because even when it felt, unnatural, when it didn't come naturally to me at that time, I didn't stop, and I just did it enough times till it became second nature, and now I can't imagine it otherwise. So I think that transition was, and even when I see people make that transition, I say it, I'm like, just give yourself room and be very gentle with yourself and take it one day at a time. No one is a pro overnight. But I've learned incredible lessons through that transition, from a consulting mindset into an operator's mindset. That being said, I do think there's a role consulting played in shaping how I think about problems, and also potentially like stakeholder management, like comms, like strategy, all of these, all of which are kind of hats I wear right now, even as an investor. So I hope that answered your question, but it wasn't exactly the easiest, but I think it's the most rewarding in my career so far, making that transition and really enjoying the end product of it. And I think that, you know, right now, the landscape is quite different. I think it's very, it's hard to give advice, especially when times pass and the times changed. But I think that what helped in my journey was having that structure in the beginning of my career. I know what good looks like. I know how to have communications with people across all levels. I know how to make use of a meeting time. I know how to influence to reach a decision. I know how to facilitate. All of these are nuanced skills that kind of come in the most, I guess, unsuspecting ways that become useful right now in my career. So that's what I would say to that.
I wanna support that. And, you know, I have a kind of a similar background where I came from a very structured environment as an investment
Yeah.
banker before I became an actual operator myself. And I see that a lot of people today want to go straight into the startup world, which is always very messy, right? The natural tendency of startup, you are right, is execution, execution, experiment,
Yeah.
try, fail quickly, try something else. It's, you know, you
Yeah.
don't wait for 1 year to try something. You wait for 1 week and then you keep pivoting, you keep trying. Versus when you're in a very structured environment, you have longer gestation periods, but you actually learn a lot of structure.
Yeah.
And I was thinking to myself the other day that I actually value structured work experience over college education. And I wonder, I'm not telling people not to go to college, clearly not, but I just want to hear, as you now moved into now the VC world, how do you think about your experience as an operator and your experience with structure now as an investor? Talk about that.
Ooh, that's a very interesting one because maybe a bit about my role right now. So I'm currently building a fund, and it's a pre-seed fund, and it invests in pan-European tech startups at their very early stages. So it's pre-seed. It's the spectrum from idea to a couple of, you know, an MVP to maybe a product and some revenue, more along that spectrum.
What's
But
an
it's the first.
MVP? You have to assume not everybody watching knows.
Okay. So it's pretty much a VC fund in Europe that invests in really early stage. So pre-seed, I mean, it means many different things these days. I'll say
What is
that.
an MVP? You use an acronym.
Oh, yeah, the minimum viable product. And yes, so I guess more color on that. I mean, when you start off and you have an idea, most of the time you try to validate that idea somehow, maybe by building a little, you know, simulated, I guess, model of that idea. It doesn't even have to be an app. It's just something. It could be an Excel sheet. It could be a form. It could be a bunch of processes strung together, but just pretty much validating that the solution you want to build, there's a problem that people are willing to kind of use it for, if you see what I mean. So
Yep.
that's pretty. So we come in at the very early stages. So typically these teams, it's usually either a solo founder or two founders who have identified a really huge problem and have some initial, you know, MVP, which is the minimum viable product, that shows that there's some traction. And then they come and they're like, hey, we have this problem. Here's what we've, you know, this little thing we've built, and look at all that's happening. We need funding to pretty much go to the next level. So that's typically the stage we come at. And the name of the fund is called First Check Fund. And it's with Octopus Ventures, and Octopus is a leading multi-stage fund here in the UK. And I lead the pre-seed fund, which is the First Check Fund, with my partner Kirsten, and we pretty much kind of built the fund from scratch. The reason why I'm saying this is because my operator background kind of comes here. So the typical, you know, venture capital experience is that you join an existing fund that already exists. It's been raised. You're just pretty much deploying. But what I'm doing right now alongside my partner is that we're pretty much, we're raising the fund from scratch. We are building processes. We are deploying with founders. We're pretty much managing LPs. So it's a bit like a little startup as a VC fund. So it kind of feeds.
So here's what's exciting, because I was going to push you and say, why did you jump from, you were an operator, but you worked at companies that other people started. I was going to say, why did you decide to become an investor as opposed to not being an entrepreneur? But you've basically become almost what you call an intrapreneur, where you are starting a fund, but within a broader structure.
Yes, that is exactly correct. And it's exciting because this was the question I asked myself during my MBA, right? I was like, do you want to start a business? Like you've built strong experience to start one. You've built the networks. You could go do something that was big. But I think a lot of the times people don't talk about how you kind of choose an idea, but then an idea also chooses you. I hope that makes sense. I think there is an element of serendipity, like this culmination of finding the idea that you are willing to spend the next, whatever phase of your life building, irrespective of how it turns out. And you're like so bought into it that you couldn't imagine not doing it. And I think that I just never found that for me at the time. And everything I found was nice and exciting, but didn't have that oomph. I feel like ideas need to be like an airworm as a founder. You kind of need to be obsessed in a way that this needs to exist, and I didn't find it, and I tried to, which is so interesting because like you think it will just come to you when you're ready, but sometimes the idea finds you and you find the idea. So that was the case in my situation. Yeah.
Okay, so talk to me about, because I think a lot of people obviously are always thinking about you an idea didn't come to you, but a lot of people think they have great ideas, right?
Yeah.
And so they want to dedicate their time to an idea they think is great, and then they go about looking for people like you to fund them. And you are working at the earliest stage, which I think is really interesting because it's exciting because people are still in the idea phase, but it's also rife with so much potential bias.
Yeah.
Because it's still like, I want to make glasses, but I may not even have glasses put together yet. Right? So how do you, as an investor, how do you think about who you want to fund? Because I think anybody listening to this, either if they're interested in becoming an investor, this will be useful for them, or if they're interested in looking for money. What is attractive to you at your stage, the earliest stage, to give somebody money to start their company?
Yeah, that's a great question. And I think before even answering the question, there's some context, just basics on how like a VC fund works. Like investors are looking for ideas that will return the fund. Like they're literally stewards of, limited partners who are called LPs, their money. People give investors money and say, hey, you go find these amazing people building amazing things and we'll return, this money with a multiple or whatever. So with that in mind, investors are just that, investors. They're looking for things that have a high potential of success, even if it's at the earliest stages, which is when it's the riskiest and I guess the hardest to tell. So one thing that I find very consistent with the founders who have gotten, either I've invested in or I've seen have been successful in raising at least the early stage, rounds, it is pretty much in my mind like three pillars. Because there's very little in the mix at the time in terms of like product or like even teams sometimes, usually just one or two founders, there's an over-indexing on the team, but there also has to be a great market opportunity. And in between that, there has to be a great product that gets you there. So think of that as the go-to market. There's other things around like maybe the revenue model, how does it make money over the long term? But at the earliest stage, the greatest risk is really just execution risk. And the fact that can they do what they say they will do with these funds? Because at that stage, you've not done much. You don't have product. You don't have, even if you do have an MVP, it's very early signs. So it's like, is it possible for them to execute? Now you actually could find an amazing founder who can execute, whose background is perfect. Like you said earlier, you might love glasses, but you've never won glasses. Typically, investors really over-index on what is it about this founder's background that makes it, I guess, a competitive moat. Something that makes it easy for them to execute this idea makes it hard for everyone else to. The reason why I guess investors think that way is because I think at the end of the day, speed is very important, especially at the early stage. You kind of need to move very quickly, iterate quickly. It's almost like trying not to die, and moving is the only way to have inertia suck you down. Like, oh my God, nothing's happened. So I think at the end of the day, investors are really trying to find out like, what is it about their background? Is it that they've built products before? Is it that they've built something similar in this space? Is it that they have a lived experience that makes them compelling storytellers? Is it that, these are all the things investors are looking at. And the real reason is really just, if I back this team, there are other teams who are going to try to solve this idea. how do I know that they are actually going to compete effectively in the market at that early stage? So that's one thing on the team. And then there's also just the team competencies. Like we know, and I think this is where a lot of the bias in VC actually happens, because with a team, what good looks like often looks one way. And it's like, that's not the only way good look like. And now it's this weird, dynamic where it might not even be good, but because it looks that way, it's assumed that it's good. And then even if it doesn't look that way, it could be good. But because that's the only thing, So I think there's a lot of over-indexing on team. And I guess the second thing, which I mentioned earlier, is the market. Like, even if you have a great team, and many people believe many different things on this, but if you have a great team and the market opportunity is quite small, it's like, that's a very tough place to be in, because you believe that potentially the founders could find a larger market opportunity, but that could take a long time. And it's like, the most amazing investments are usually when there's a super strong team and there's a huge market opportunity. Oftentimes they find the go-to-market somehow in that journey. So I'm going to stop there, but that's the three things
that's fair. So make sure if you're thinking about raising money at the earliest stage, make sure there's the founder market fit, right? Like your team are really, poised. Like there has to be a reason why the investor thinks that you can execute. Right? It's got to be a market that, in your opinion, is big enough. Got to have that go-to-market strategy that matches the founder and the market and the product that gets you there. So tell us, what's it like raising a fund?
Oh, wow. Yeah, it's a very interesting experience. A lot like selling. It's pretty much selling. And at the end of the day, especially for an early stage fund, most people are just buying you. And the fact that, because you're also similar to a founder.
I was about to say that there is almost no difference between you and an early stage founder, because you have not raised a fund before. You're a first time fundraiser. So
that is correct. That is absolutely correct. So it's a lot like being a founder. So even when we speak with founders, we kind of have this shared experience, because we're also fundraising and the founders are, fundraising from us. But I think it's a lot about like selling, storytelling, having a very clear strategy. The market is very crowded with many emerging managers with many unique selling points. At the end of the day, your investors want to know, why will you invest? The greatest founders get money from you. Why will they take your money? Like, what is it about you and your partner?
That's what I want to ask you. Why? I want to ask you. So that's my next question, because I think up until fairly recently with market conditions, there's been a lot of liquidity out there in the marketplace. And so if you are raising a fund, I'm going to say, okay, Maria, why you, since you've never done it before? I get that the market is big, right? You could go and invest in a bunch of companies that could deliver 1,000 times what I give you. But how do I know that you're going to be able to get into those deals? So what's your sell? What's your pitch?
Yeah, so because this is not just my fund, I also have a co-partner. So we kind of balance each other out, and we really make a strong, I guess, holistic team. On my end, I think one thing that founders quite find appealing is the fact that I've been an operator before. So this is something that just kind of I've seen over and over again resonate with founders. It's like they want someone who's done it before. They want someone who's business. They want, to be honest, like ultimately at the end of the day, I think because there's so many different business types, there's not so much you can actually like really share. You can share one or two things, but at the end of the day, what you have is empathy, because you just know how hard it is. Like, you just know that it's not easy to scale a business, much less found it, then try to grow it, then try to scale it with the uncertainty that brings. So I think there's that empathy. There's that, and then also not just an operator, but then operator with the with the multinational tech startups, so with the Uber and the branch, and it's like this person has seen what good looks like at scale. I think the other thing is the branch is a fintech. I do have a fintech background with consulting, and I'm also a chartered accountant. Please don't ask how that happened in my journey, but all of that kind of adds to it. And then also, to be honest, I think being an investor is a lot about like just connecting with people, knowing the right questions to ask, moving very quickly, because founders don't have that much time, and you as an investor don't have that much time to spend as well. So really utilizing the time. So I think I just love connecting with people, and I think that energy kind of comes through, and founders like it. So that's another thing. You'd be surprised that in the early stage, it's not how well you can, analyze a model. All of that does not count. At the end of the day, it's how you. Sorry, can you hear me?
I can hear you. Yes.
Sorry about that. Yeah, how well can you ask the questions you need to ask? How quickly can you move? How quickly can you, analyze the founder's experience, product, market? And at the end of the day, to be honest, quite frankly, we'll talk to you again. Will the founder want to talk to you again? Do they want you as an investor?
Yeah.
Because just as the founder is pitching, you're also technically pitching. And at the end of the day, you each other. So yeah, I think it's that's how I kind of think about it.
I think, I agree with you. And we recently closed a round of funding. And I always say money is money, but you want really good money. You want smart money. So you want someone who, first of all, is not going to be difficult on your cap table. Someone who's going to bring drama.
Yeah.
But you also want people who bring value to the table, right? So either they have a very unique user perspective, or in my case, they understand the retail landscape, they understand consumer goods, they have the relationships, or they have operated a D2C business before. And what I have found is you have really great investors who understand you. And I think somebody who, and not you personally, but understand what it's like to be a founder, to go through, I always tell people it's a day of volatility. You can start the day off super down. In the middle of the day, it's really great. And at the end of the day, it could be anything, right? And so someone who really understands the journey of a founder, I think is really important.
Yeah. And you're absolutely right. Like, I think at the end of the day, founder has to think, and she's like, I need to decide if I want this person on my captive, because it's kind of like a marriage, right? Like everyone says that, but it's actually true. Like once you're in, it's like you're there, they're there. You have to figure out how to work together or buy them out, and no one wants to do that. I think another thing that's helped in my journey, particularly, especially being a first-time emerging fund manager, is also, having the backing of a larger organization. Octopus is quite known in the market. It's a big core. It puts purpose, alongside profit. There's been a lot of amazing things that Octopus is known for in the market, and founders want that on their cap table. So it's a combination of both Kirsten and I's experience, but then also the Octopus brand as well. So I think it's a mix of many different things. But like you say, you're absolutely spot on in the sense that at the end of the day, you want a value-add investor, and it's so common that many investors, and it's also very tough being an investor, having to make several investments, but it's hard to kind of like pitch this dream, and then after the investment, it's like crickets, right? Like at the end of the day, you want to just do what you say you will do. If it's like this is just a check, at least it's upfront. But you have many people trying to pitch, and it's like we will do this, and then the investment happens, and it's hard to kind of get that back. So I understand the founder's sentiment, but you're absolutely right. Like you have to think about what's the value add, like beyond the money.
So tell me, what are some red flags as an investor? What are the things that you see that tell you, I don't know about this, right? Because I think that a lot of times people may not be self-aware.
Yeah.
And investors are looking at particular things. So what are some of the red flags that you've seen?
So this is such a good question, because one thing that I personally don't like about like the ecosystem is that the information asymmetry is just crazy. Like there's just, stuff that investors know that founders don't. And it's like, these are like really, and it's like stuff that eventually impacts whether or not investors invest. And I understand that to an extent you don't want people gaming the system, but it's like just some basic stuff that we just avoid, having that initial call, maybe the founder working on it. So a few red flags I've personally seen. So I think, and I know this is such a basic point, I should even like not be a non-starter on the investor side, but investors see a lot of decks. And if the deck is not legible on mobile, or very quickly you can get the gist of it, okay, I think that is so weird, because you don't even get into the funnel. Like it's almost like, the investor sees the deck and like scans through it, can't exactly understand what you're trying to convey, how big the problem is, what your solution is, what your differentiation is. That already just, you're no longer running. And it happens so quickly. I think there was a report recently that DocSend sent and said that investors spend, I think, 80 seconds on an entire deck. And
Wow.
it's like, that is ridiculous. So it's like, you definitely want to have your deck clearly spell out what you wanted to spell out. And what I say is like, at the end of the day, have you answered 4 questions? How big is it? Why your team? Why now? And like, what are the next steps? Like, what are you raising? Are you pre-seed round? Just some information on your round. So they're like, okay, do I want to have a conversation with this founder? You've given them enough information to kind of move forward. So I think like that's a basic non-starter, but I think a bit more nuanced things are things like, and you alluded to this earlier. Some people are passionate about an idea, but nothing about their background, experience, like, team actually links to that idea. And it's like, that is often a non-starter, because it's like, there's literally nothing there for the investor to work with to say, how do I know that you will build this? Now, this doesn't mean that they can't go on to build it and be successful, but because there are other teams as well who are bringing incredible backgrounds, who have such strong fit with what they're building, you are being compared with those teams. So it's like, to what extent can you highlight the relevance of your previous experience to what you're building? What you're just saying is like, look, I'm probably going to have an easier time tackling this than the average Joe who tries to tackle this. And it's like, that is compelling. It's because maybe you have the networks, you have the experience, stuff like that. So really highlighting that founder market fit, I think, is one of the, when that doesn't exist, is one of the reasons, investors tend to pass. The other thing I would say is kind of the go-to-market. So, and this is a contentious one, because I don't believe that investors know everything, and I think investors are often wrong. So the go-to-market is one where it's like, you have this way you want to target the market, but it's not fast enough, it's not innovative enough, it's too bland, and you rely too much on the virality of your product. Many times people say, oh, it's going to be viral, we're just going to do this. No, it's very, very hard to scale a product, especially a digital one, because at some point you're going to max out your family and friends. And then what happens? Like, it's like, what do you then do? But then if you have a really well thought out plan that kind of goes into the detail, is not afraid to look at the detail and realize how hard it is on the multiple channels you're going to use to acquire your first, say, 1,000 users. Like, that is often a sign that people haven't really thought about go-to-market. When you kind of see really basic go-to-market, but really ambitious numbers, it's like your conversion is probably like, no, it's probably not going to happen. So I think there's that as well.
So someone just put in the comment, investors are often wrong. and you know what? Can I just, not to interrupt you, but I think that, I always want these chats to be very open and, to provide people with a lot of context if they are considering this as a career, or, if you are looking for funding. I mean, and the world is replete with stories of investors who got things wrong, or investors who got things very, very right. And then good luck. And so I often tell people that, if you are looking for investment, a lot of this is very random. A lot of it is, yes, okay, you might be very lucky. A lot of it is your deck was amazing. You have the great team, you do it. So many things can go right, and so many things can go wrong, right? And so you just have to stick with your guns and go with the best of it. And sometimes getting funding from VCs is not the only path, right? There's so many different paths to scaling your business. So talk to me about how, one thing I want to mention is that for people who are thinking about a career in venture, what I think is interesting is not only do you have the operator background, but then you also had the sort of the corporate background. You went into venture, but you didn't start a fund, from complete scratch. You went into, it's almost like soft landing. You joined a firm that already has a reputation, right? Tell me why you thought about doing that, as opposed to starting, Maria and Kirsty, or what's the name of your co? Why did you decide to do that?
Yeah, no, this is a good question. And it's one we often even get asked, like, why don't you just start this yourself? So venture is one of those career paths that I find very interesting, because it's a long-term game. With other career paths, you could like do 2-3 years and you could be out. But with venture, the average life cycle, lifetime of a fund is 10 years. So you're probably going to need to, for you to even get a career, like to even have credibility, you probably need to do a minimum, maybe like 5 years, like get a few exits under your belt, like build some track record. So I think, and that is the conundrum with emerging managers, right? Because no one wants to back an emerging manager because they don't have track record, but they need to be backed before they have track record. So it's like this catch-22.
Yeah.
So I think with a larger fund, I think there's a lot of benefits to that. There's really leveraging the brand and the, would I say the infrastructure of the larger fund. There's also not having to reinvent the wheel on certain things. There's also the fact that the brand attracts really quality deal flow already alongside your personal brand as well. There's also the fact that, LPs ultimately, especially the institutional LPs, want to back solid institutions, if you see what I mean. Not like, yes, in the early stage they might want to back people, but it's like, what does continuity look like for this fund? Like, do you have, which is so ironic because like then it comes back to your operations chops. Like, can you build a business? A fund is a business. Like, yes, it has their life cycle, and I mean Sequoia's kind of broken things now with their new model, but fundamentally a fund is a business. It's an entity that has operations and like processes and will hire people to invest to pretty much return to its LPs. So I think the rationale to kind of go within an organization for me was really because I thought, one, the opportunity of having to build a fund from scratch was very appealing to me. The brain, I wanted to something that was in its earliest stages and go through the entire process of having to fundraise, having to deploy, and all of that. And then, either decide to pretty much grow with the fund and, build within the fund, which is a legitimate path. There are many ways to venture. Or start a fund of my own. I really, really respect people who start a fund of their own. And I'm being completely honest because starting a fund is a very expensive thing for someone who doesn't come from money. Like, you need to be comfortable with not having money for a long time, because the way funds work, you have your management fees. It's solely dependent on your fund size. If you do not raise the fund, you literally have nothing to run the fund with. So it's like, it is a lot, and it's not easy. And Exactly. And it's so funny. I saw a stat recently that said that only, I think, 30% or something, I can't remember, but it was a very jarring number of funds who even reach the first close. Like, many funds die at inception because we're not able to raise the fund, especially for first-time fund managers. So I think all of this considered, and the fact that I have this really incredible operating background, this burgeoning investing, experience, I thought that this was the best decision. And I think there are many ways to be an investor, and I'm enjoying this one.
Awesome. Well, someone just asked, I think you answered it a bit, how did you convince yourself to go for it and start the fund? And I think, you really gave an eloquent answer to that. And it's very similar. As I'm listening to you speak, it sounds like we are living the same life, which is, I'm operating one company. You are operating a company that will invest in companies, but it is this as a 10-year journey. And I started paying myself a salary in November of last year, which means the first 3 years of running this company, I made exactly this much dollars. Right. And but I am so in love with what I'm doing. I am so in love with my market. I'm so in love with my product. I am more in love with my customer. And more importantly, I'm in love with my vision of what I can do with this business for this customer with this product. So that's the stuff that you have to really feel, because you're going to go after this for, at least, as you said, a decade, right? And for me, the same way you think about, you have to return money to your limited partners. I have a small group of investors. We raised over $1 million, but I've got to return money to them. I've got to return to myself.
Yeah.
Right?
Yeah.
And you want to build value. So I always tell people, let me ask you this question, my final question. We've got 8 minutes left. seeing as we're basically, you know, two sides to a coin, right? You're an investor, but you're an entrepreneur. I'm an entrepreneur, not investing, but investing. So I'm invested in only one company and I'm
Yeah.
operating. You're an investor investing in a lot of companies and you're also operating. How
Yeah.
did you, you know, are you saying in your opinion that the key difference is zeroing in on that special idea that keeps that you can constantly do? What is the difference?
Yeah, no, this is a very interesting point. And to be honest, I really honestly think that the founders are the heroes of the story. And the reason is because founders take a lot much more risk. And I mean, there's a spectrum here, but it takes a certain, I don't know, like gusto to believe in something before it exists, if you see what I mean. Like it doesn't exist, but you see it clearly in your head. You feel so passionate about it that you continue doing it even when it feels like chewing glass, because it's like there are days I'm sure it's like, what do I really need to do this? Like I don't have to, but you still go back to do it. Also, founders have their identity, their sense of self. It's almost like a mission. It becomes so important to who they are. And I think that it's hard to compare that to investing, because investing as a matter of design is a diversified portfolio.
Yeah.
Like, yes, we, invest in startups, but it's like there is a portfolio. It is assumed that some will fail. You're
Yeah.
assuming that won't fail. You're like, I can't fail. I can't afford to.
Yeah.
So it's like, so I think the pressure, the design, like the structure is quite different on both ends. But I think for my, experience personally, I think ultimately, I think at heart, I do love building things. At heart, I do love shaping things. And I think being an investor at a fund at a very early stage where I get to build one, deploy, work very closely with founders to shaping their businesses and supporting them through follow-on rounds, I think it feeds, that part of me that one loves the thrill, craziness, the peaks, the truths of early stage. So I'm kind of living vicariously through founders, like their proxy. It's like when founders come to me, we're having chats on portfolio support, like being that close to the founders, I find it very rewarding. And then also managing the business of venture where the fund needs to return to the LPs, all of that, I find that also interesting. So I think I'm in this space where, all my brains, all the things I love to enjoy are all encapsulated into this one career, and I'm incredibly lucky because I think it's not very common to find that.
Okay, so I have two questions I love to ask that I want to make sure I ask you. One is, as you reflect over your career, which has been really amazing and varied, you've been very blessed to be able to do different things. Can you share one regret / mistake?
Yeah.
And then what do you wish you knew when you were starting your career, that you have now, that you learned over, the years of having developed the knowledge? What do you wish you knew?
Ooh, those are two very good questions. Okay, I think I'll start with the first, which is like what one thing I regret. Something I wish I could have done differently was start investing much earlier. I thought a lot of money to invest. I didn't know that. Even at the very, early stages of my career, maybe when I was at, even in consulting Uber branch, I could have started investing and supporting founders at the early stages, even if it's like 500,000, like $500 tickets, like even if it's just sweat equity, like supporting them through their journey, but learning how startups work from an investor's mindset. I think it's not rocket science, but I think it does take a few reps for you to kind of get a hang of it, to know what good looks like. And I wish I did that earlier. And I don't think that you have to be an investor alone to invest. I think you can be an operator and investor. And I wish I started much earlier, because then I would have built some kind of, an even longer track record of like 15 years, for example. Or do you see what I mean? Like just kind of getting that time earlier. I wish I started earlier. And then I think the other thing you said I would do question.
Uh-oh. Are you there?
No, yes, I was asking, what was the second question? What
So
I
the
would do different.
one, what do you wish, like based on
I,
all of the learnings of your career, what do you wish
yeah.
to tell yourself of 10, 15 years ago? What would you say?
Ooh, I think I would say, oh, this is such a good one, but I think I would just say like be yourself, because I feel like there's this really weird thing that happens where you think censoring yourself makes it better, but like ultimately it makes it worse, because you just chip up pieces of yourself and then your uniqueness is gone, and then you're bland, and then you're not like, it's just like, just be comfortable in your skin, however awkward and weird, like just stay there, because that's you, and that's like what you have to give to the world. It might not always be pretty, might not always be what people want to hear, but stay you. I wish I did that. I only grew into myself over time, where I just didn't care at some point. Like, it's like, you know what, everyone's gonna be fine. Like, I'm gonna have to say what I want to say, what I feel. Obviously, I'll be diplomatic about it, but I think I would tell myself to just stay in yours, like sit into yourself, like be okay with being you. You don't have to look a certain way, you don't have to sound a certain way, you don't have to edit and censor yourself, because that's a disservice. Because what I found out eventually was that the more you do that, you think you are selecting the bits of yourself not to share. But the irony is that subconsciously, even relevant bits to your life and your job and your work is also being censored subconsciously, and you're not bringing your full self. And there's stuff you would have said that you didn't say that would have probably made things much, better for you and everyone else. So at this point, my motto is
Yeah.
kind of like, if you have something to say, you say it. Like you
Yeah.
like and I think maybe kind of getting older, you said some of these things, but like, yeah, I think that's what I would tell myself.
Oh, fantastic. Maria, we are at time. I'm so glad we got a chance to have this conversation.
Yeah.
And honestly, I wish you the absolute best as you raise your
Thank
fund, as you
you.
deploy
Thank
capital.
you.
And I'm always here for you, and you've been a really great sounding board for me as well. And honestly, thank you for making the time to speak to our audience. I really appreciate it.
Thank you for having me. And yeah, this was amazing. I had to put on my bossy lipstick for this. Like, I had already, put on the first coat this morning. I had to top it up. I was like, yeah, I need to feel really bossy for this one. Having me, it's such a pleasure. And thanks to everyone for actually, waiting on the live as well.
Awesome. Awesome. All right, Maria, enjoy the rest of your time in Dubai.
I will. Take care. Bye.
Bye.